Welcome to Motley Fool Money. Thanks for being here. I'm your host, Chris Hill, and joining me in studio this week from Motley Fool Inside Value, Joe Mager, from Motley Fool Income Investor, James Early, and from $1 Million Portfolio, Ron Gross. Gentlemen, good to see you as always.
How you doing, Chris?
Well, we had a short week in the markets, but we've got earnings from oil companies, internet companies, and companies that do other things. Princess Leia is now a Disney princess. We will get into that.
Do not mock Princess Leia.
Never.
I didn't know you had it. Okay.
I think we all had a little thing for Princess Leia back in the day. And as always, we've got a few stocks on our radar. But we begin with the big macro. And this week, guys, the big macro is absolutely Hurricane Sandy, which caused huge damage in the northeast part of the United States. Obviously, the recovery is ongoing. Worth pointing out that this is a storm with a death toll. And obviously, our hearts and our thoughts go out to the people in New York and New Jersey who are dealing with the recovery. Estimates now are that the damage could cost somewhere in the neighborhood of $50 billion. Joe, I want to start with you because the stock market was closed on Monday and Tuesday. First time in over 100 years that it was closed for that amount of time due to weather. What did you make of the reaction when the markets reopened on Wednesday?
You know, some of it was rational and some of it was a little zany and speculative. So insurance companies are going to take it on the nose from all the claims that are pulled in because of this hurricane. And, you know, that's the line of business that they're in, insuring risk, and risk happens. And good insurance companies will have reserved and set aside money for that. But where I thought there was kind of frivolous speculation was with some companies like Home Depot. The stock popped 3 or 4% when the market opened that day on speculation that, you know, they'll sell more flooring, for example, in the Northeast. But that's definitely not a 3 or 4% move for the stock. It's just a short-term blip that might help some sales in the Northeast.
James, what'd you think?
Well, Joe's point about insurers, a lot of the insurers, well, first of all, they're relatively strong in their capital positions now, which is good for them. And a lot of the kind of the frontline insurers reinsure, meaning they go to a bigger insurer for their bigger risk, which is kind of weird. But the bigger insurers are also still relatively wealthy. But long term, we are seeing more disasters. You know, I'm kind of an eco freak, so I watch these sorts of things. And that's a business I wouldn't be
You're
investing
a disaster
in.
buff.
I'm a disaster buff. Yeah, zany, I think your word was, right?
Yeah.
Coined by Shakespeare, actually.
With respect to how to kind of play, in quotes, the hurricane, I don't think you do. I think there'll be a lot of traders out there that do try to capitalize on some short-term movements. For long-term, foolish investors, if you will, I don't think that's the way to go. I think we have to just stick to what we've always done. You buy good, strong companies, you hold them for the long terms. Things like this will happen, you know, every so often as they do, and it's impossible to really predict or time or to say what that will happen to cash flows as a result. Let's just stick to our knitting, I think.
Yeah, and if there's a way to play it, it's to use any pullbacks in good stocks as a buying opportunity. So something like a Markel or Berkshire Hathaway insurance companies that if they get, you know, punched and have a pullback, it's just a temporary thing. Could be a good time to buy the stock. And something else to remember is that disasters like this also end up raising insurance prices, which is collectively good for the industry.
Let's move on to some of the companies reporting earnings this week. Shares of Starbucks rose more than 10% Friday morning after fourth quarter revenue came in at a record $3.4 billion. That is a lot of coffee, Ron.
Yeah, they're doing a really nice job, especially after last quarter where the same-store sales performance was a bit lackluster. They really made an attempt to improve that this time around, and they were promotional. They did some things to do that. They discounted coffee drinks in the afternoon if you returned. They had a big Living Social campaign, which is actually quite successful. So good for them. You got to be careful, though. You can't be promotional forever. That does affect margins. It does affect profits going down the road. But same-store sales up 7%. China, Asia Pacific really strong at 10% same-store sales increase, so that's great. They raised their guidance. The company is doing very, very well.
Are you a Starbucks fan yourself?
The coffee's actually too strong for me. I'm more of just fine with like a Dunkin' Donuts kind of guy, but I drink it, of course.
One of the things that surprised me a little bit was you mentioned they raised guidance, Ron. They also announced that they're going to open 1,300 new stores in 2013. That strikes me as a somewhat aggressive number, or do you think that's a reasonable goal?
I think it's reasonable. If memory serves me, I think half of that is in the U.S. and the rest will be overseas, which makes more sense to me. Europe is struggling, as one would expect. They actually closed, I think, 22 stores or so in the U.K. I do think that's a bigger opportunity for them down the road. Europe will take some time to shake out. But, again, China Japan, Asia in general. India will be big for them, so there's plenty of growth.
Joe?
Yeah, they're doing great. If I had any concern, it would just be that they might be chasing growth a little bit, and that was kind of what led them into a path a few years ago where they had to retrench. And when I hear 1,300 store openings, it definitely raises some question marks.
Ron, just to wrap up on the stock, even with the pop on Friday, shares about 15% below the 52-week high. When you look at the stock right now, does it look fairly valued, a little pricey? What do you think?
Based on these new results, I think I'll probably have to look again at it. It was on my radar a few weeks back. I didn't execute on it. This is a stock we sold in a $1 million portfolio much too early in hindsight. Hindsight's a beautiful thing in the investment business. I don't think it's ridiculously expensive, but I also don't think it's dirt cheap.
Some big oil companies reporting earnings this week. On Thursday, ExxonMobil reported third quarter profits fell 7%. On Friday, Chevron reported third quarter profits fell 33%. James, not great.
Well, Chris, in order to sell oil, you have to have oil, and that's been their problem, right? Production has been the challenge for all the oil companies. These guys both suffer. They also took a hit simply because oil prices were down. So obviously you have less oil selling at a lower price, you're going to have lower profits. But investors didn't really react too much. We've come to expect a lot of volatility from these companies. Both these guys had actually, Exxon benefited from refining margins. Chevron had issues here and there. They're doing maintenance. But long term, I don't think this is a problem. I think the real narrative is a multi-year focus on production.
Chevron is trailing both the market and shares of ExxonMobil. You look out over the last year, it's a recommendation in your service. You still like it?
I like its economics. I mean, there's this other issue. It's kind of a big issue, but this $19 billion judgment got levied against Chevron by an Ecuadorian court, and the U.S. Supreme Court basically refused to hear a motion for rehearing or something like that. I'm probably botching the legal jargon, but this is...
You're not an Ecuadorian legal expert.
This is basically, exactly. This basically could exhaust all their cash, and now Chevron is dealing with asset seizure. So this is something that was on the horizon forever, but it's certainly another dink to Chevron.
Some recent internet IPOs struggle to make money, and then there's LinkedIn. The business networking company's third quarter revenue increased 81%, Joe.
Strong.
They beat estimates.
Strong.
They raised guidance. 81%. You got to like that if you're a LinkedIn shareholder.
Yeah, they're my favorite of all the wildly overpriced social companies.
No, really, how do you feel?
Well, more people are using LinkedIn, and they're using it more often, so the site has gotten a lot more sticky because of improvements. I think they've done a great job with that. Revenue per user is growing so quickly at LinkedIn. It's 83% higher than it is at Facebook, which is just remarkable, and that gap is actually getting bigger. Like I said, I think the stock is criminally expensive at around 14 times sales. It is a wonderful business, but I can't get comfy with the valuation.
The algorithm is creepy, isn't it? Like how these people says, you might want to be friends with so-and-so, and it's like Joe's wife is watching us here, and she might not know, but every time I log on, it suggests that I connect with you. It's just kind of like, and people
but
from
yet
like,
you haven't.
An ex-girlfriend from like 9 years ago, it wants me to connect. Like, it's just kind of...
But purely on a business level, James. Just on a business level. That's all.
What? I guess it's a business thing. It's just I just wonder how they find out who you know.
I used to
It's
be of the
intriguing to me.
mindset that everybody was kind of on LinkedIn, but nobody was paying for it. So it was, what a disaster. I've pulled back on that. I think that was quite short-sighted. I know a lot of people who say they swear by it if you're looking for a job. The premium membership, they love.
So how do I, if I want to find it? Not that I want to find a job, but like. In theory, because we're already linked in, I can just talk to you if I have a question, but I would like browse your contacts. Is that the idea?
I think if you're a premium member, you would actually see more things like job listings where companies are actually putting their jobs on the site, whereas just a non-premium deadbeat, you see none of that.
Yeah, that's totally me.
Yeah, and headhunters pay for services too because you put all this information on there about your background and specialties, and they can really hyper-target people who fit the jobs they're looking for.
I know that our company, among many others, uses LinkedIn and is very satisfied with it. So from a corporate level, I think they have satisfied customers. Just to wrap up on the stock, Joe, I was going to ask, do you think it's pricey or too pricey? But when you use the word criminal, that makes me think.
Criminal is strong.
That's a bit
if
of
I was going
clarity.
to own one of Facebook, Yelp, or LinkedIn, it would definitely be LinkedIn.
And if they continue to grow at those growth rates,
Yeah, it justifies 14. I
not
read an
as
amazing
bad.
stat this weekend that Amazon in 98 was selling at 97 times sales, which of course I would have said was impossibly high, but the stock's a 9-bagger since then. So
It's more of a misdemeanor than in LinkedIn's case.
yeah.
Coming up, to paraphrase the world's most interesting man, we don't always talk about management shakeups, but when we do, it's about Apple. Details next. You're listening to Motley Fool Money. Welcome back to Motley Fool Money. Chris Hill here in the studio with Joe Mager, James Early, and Ron Gross. Late on Monday, guys, Apple made the surprising announcement that two top executives had been pushed out the door. Scott Forstall, the senior vice president in charge of the iOS software, and John Browett, who was the head of retail. Probably worth pointing out, Browett had only been there about 9 months. Forstall dates back to his association with Steve Jobs back in the 90s. And Ron, Forstall was asked to leave after he refused to sign a letter apologizing for Apple's new mapping service. Were you surprised, first and foremost? Were you surprised by this news?
Yes, I certainly, it wasn't even something I was thinking about or was on my radar. I will say overall, before Joe jumps down my throat here, that I remain a big fan of Apple, both the company as well as the stock. Especially the 15% pullback we've had of late makes it even more attractive to me. However, I'm not a cheerleader. I am an analyst, and there are several things that I'm seeing that could indicate a pattern here. The Maps debacle, the missed third quarter earnings and sales, and that built on some weakness in the quarter before. Yep. iPads were weak. Mini remains to be seen what happens there. The price point is worrying some people.
Weird too.
So not everything is firing on all cylinders, as I like to say. But if you look at the whole big picture, it's still a fantastic company at a reasonable valuation.
Joe?
Yeah, I'd agree with all that. I think.
Thank you. We'll move on.
But, a year ago when Steve Jobs passed away, we talked about the signs that things might be tilting for the worse that would eventually happen. One was pushing products out the door that weren't up to snuff, and I think Apple Maps is pretty clearly that. Another was product delays. iTunes 11 was supposed to roll out, and that got delayed. And another was just unoriginal copycatting with innovations. And I think when you look at the iPad mini, it's a great little product, but there's nothing original there. It's just kind of a Me Too, Nexus 7 wannabe.
I have to agree with Joe. The difference between very, very good and excellent might seem small, but it makes a huge difference in terms of your brand, in terms of your reputation. I think that's the difference between Steve Jobs and what we've got now.
Beam, which is the maker of Jim Beam, Maker's Mark, and frankly a lot of other alcohol that I drink. Third quarter earnings came in higher than expected. Joe, what did you think?
Great quarter, great business. I love that they're reinvesting heavily in their core brand, so promoting Makers and Beam, and it allows them to cross-sell kind of ancillary products. So just like you've got, say, Coke and Diet Coke, they now have Maker's Mark and Maker's 46, which I know we both appreciate.
We're fans.
That said, I think I'm a little worried about their pricing strategy. They've been very aggressively raising prices on Maker's Mark and Jim Beam too, but a 5% increase on Makers. And at some point, I've worked in the liquor industry. It's the family business, and you definitely see distributors go through and push up prices like this sometimes too far, and customers will walk away and try something else. And I think when you look at bourbon, there are a lot of good lower cost options. Like honestly, I think Buffalo Trace is a better looking product. It's a better tasting product, and it's much cheaper.
Well, that was one of the questions I was going to ask you in terms of their pricing power, because when you look at Beam, which is about a $9 billion company, and you compare it to Diageo, which is this alcohol conglomerate, $72 billion market cap, is Beam just not at that point where they have the type of pricing power that they want?
I think they do. It's just that they don't have as many big gun products
Premium
as
brands,
Diageo.
Yeah.
Shares of TripAdvisor up more than 20% Friday morning after third quarter earnings beat expectations. Ron Gross, what is going on?
Boom, huh? That's some move.
That's enormous.
They put up really great numbers. Management said the traffic to their websites increased by a third. Those are pretty big numbers. This is a company that really benefits from what we call network effects, which is the more people that use TripAdvisor, the better the experience is for everyone, and the more traffic we get. It's really an exponential build onto there, and it's showing in the results. Revenue up 18%, and the advertising business, the revenue from there was up 15%, which is where this company mostly makes money. Let's not forget, it still is an advertising model. They do have some subscription revenue as well.
I was going to say, this is another one of those internet businesses that I consume, but I don't pay them anything. So if I'm going on a trip, I'll check the hotels for reviews and all that sort of thing, but I'm not paying them a dime.
And right, that's common. It's mostly an advertising model. Company needs to work out where they go from here. They need to work out mobile, just like everyone has to. They need to work out international expansion. But for now, they really seem to be increasing the traffic quite a bit.
Is this a rising tide lifting all boats kind of industry? Because it's probably worth noting that Priceline also beat on their latest quarterly profit, and their shares were up about 10%. That, when you look at stuff like that, it just seems like maybe people are just doing a whole lot more traveling than I would otherwise imagine.
Yeah, I was going to actually talk about Priceline later, but we can just quickly now. Priceline actually turned in great numbers too. Specifically, people are very relieved that the European business was pretty robust, and there was some concern there.
I think that might be your stock on the radar.
Maybe.
But that's just
My
a
guess, too.
And finally, Disney announced this week it is buying Lucasfilm for $4 billion in cash and stock. Lucasfilm, obviously the company behind the Star Wars franchise. James Early, what'd you think of the
Chris,
news?
probably the single biggest piece of news most relevant to people is that there's going to be a new Star Wars movie coming out in 2015 that may or may not have Jar Jar Binks. I think it's the follow.
Let's all hope not.
No, I liked him. I thought the character was likable. Just my opinion.
You're the one.
Yes, me. So yeah, this is a lot of money, $4 billion. We can't really. It's hard to price this sort of thing, but we do know Disney has actually done a good job recently of not screwing up characters and sort of brands. Years ago, under Michael Eisner, they had sort of creative problems, but they bought Pixar, they bought Marvel, and they both monetized those pretty well. So I think it's pretty. The idea is that they've got this global reach, parks, branding, whatever you want, Disney has it. So you can drop in this sort of established franchise that maybe was sucking a little bit of wind and make more money with it.
Ron, some people saying they overpaid.
I thought so too, and then I started to read up on it. And when you think about that, they have a plan to roll out a new Star Wars or Lucas-based product movie every year or two, and that can happen for quite some time. They'll move to TV with their Disney XD channel. There's a lot there. There's all the cross promotions and all the as you said the parks. There's a lot they can do here, and the $4 billion can be made back more quickly than I would have originally thought.
A lot depends on how good these movies
Sure,
are,
of course.
obviously.
Joe, you get the final word.
Yeah, and the cash comes in for a long time. Just remember, Snow White came out 75 years ago, but they're still printing cash on that.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. I'm Chris Hill, and joining me in studio once again, Ron Gross, James Early, and Joe Mager. Guys, that time once again, time for the stocks that are on our radar. Let's bring in our man, Steve Broida, from the other side of the glass. Let's bring him in. We got time. Steve can ask you a question, and then you can just fire one right back. Ron, what is your stock? Although there was some foreshadowing.
It was. I'm going back to Priceline, PCLN. Really strong results this last quarter. Net income up 27%. Concerned about the European business. Seems to have been overblown. They're doing really well. Very profitable. Strong balance sheet. 22 times earnings. Not necessarily a Ron Gross type stock, but if they're growing at 27%, maybe it's something I need to circle back around.
Steve, question for Ron about Priceline?
My question is, what's going on with William Shatner's character? Is he dead or not? I thought he blew off a cliff or something.
I believe they brought him back. Did they not?
I think he's not on television anymore, but they're just using his character in The Negotiator online.
But didn't they kill him? Wasn't that part of the big news story that he went off a bus or something?
All I know is
they brought him right back.
He was originally paid in a ton of options, and then when the stock was almost worthless, he basically dumped them and has not benefited from the rise now to where's the stock? $650 a share?
Ooh. Feel bad for William.
Hurts, yeah.
Do you have a question for Steve?
Yeah, Steve. Princess Leia or Princess Amidala?
Princess Leia all the way.
Oh, old
Strong
school.
choice.
Nice.
That outfit in that third
The
movie.
Jabba the Hutt one?
Yeah, that kind of did it. James Early, what's your stock?
It's called Giant Interactive, Chris. This is a Chinese online video game company. It pays a 5.7% yield, a lot more cash rich than you might think. The Chinese stock market has gone down the past couple of years, so has this stock, but revenue has been growing at double-digit rates. I mean, this is huge. They make money on some of the games you pay to play and on the gaming points and little things like that. So I think a lot of potential here, and I like the yield, too. And the disclosure is to American standards in terms of how the company expresses its financials, all that kind of stuff.
And the ticker?
GA.
GA. Steve?
Dividends in U.S.-based companies don't seem all that safe right now. Less so in China.
Well, these guys have a lot of cash. That's the main thing, and they seem committed. So, with any company, it's just a matter of what they can pay out. But, financially, it seems safe.
James, do you have a question for Steve?
Steve, a two-man luge with you and one Star Wars character. Who would you pick?
Oh my goodness, that is a very complicated question. I think Yoda, because he's very, very small.
Yeah.
You'd have a lot of room on the two-man luge.
That's
though.
right. That's what I'm looking for.
He goes in the front of the back.
Plus, I mean, let's not kid ourselves. He's got the Force. I mean,
You go with the Force every time.
Let me just put it this way: in the 2014 Winter Games, if the U.S. is being represented in the two-man luge by Steve Broido and Yoda, who's not betting on them?
Well, I'd have Yoda do gymnastics or
I
fencing.
hope you I will.
Joe Mager.
TD Ameritrade, they just raised their dividend 50%, which is pretty hearty. Trading volume's fallen off because a lot of retail investors have walked away and they're suffering from low interest rates at TD. They make money on the funds that they're holding for clients, but I think eventually both those things are going to come back and they'll do very well. In the meantime, you get paid to wait.
And the ticker symbol?
AMTD.
AMTD. Steve Broido?
Are these businesses basically just sort of commodities, thinking of E-Trade versus Scottrade versus TD Ameritrade? What makes TD Ameritrade better?
There is a commodity-like component to it, and for a long time they all competed on price, but over the last decade there's been a lot of consolidation, so TD Waterhouse and Ameritrade, for example, coming together, and I think eventually you're going to see TD Ameritrade acquire E-Trade and kind of consolidate the industry with Schwab and the two of them. But yeah, there is a component to that.
Before we get to your question for Steve, TD Ameritrade, they're based in Omaha, right?
Yeah.
Berkshire Hathaway, I know because you follow them very closely. Berkshire Hathaway, also based in Omaha.
Therefore, they should merge.
Well, no.
They just bought. Did you see the acquisition today?
They just bought Oriental Trading.
The catalog, which goes right into my recycle bin as soon as I get it.
The catalog, which just has all these really
Knickknacks,
cheap toys and knickknacks and holiday decorations and that sort of thing, also based in Omaha. First of all, what did you think of that? That makes me respect Oriental Trading a whole lot more, that Warren Buffett decided he needed to own them.
I wouldn't have bought it myself.
Even more impressive is the $500 million he paid for it.
Wow.
Yeah. Well, Buffett has been acquiring a lot of print newspapers too, local papers lately, and he's confident that they can wring money out of that for longer than people expect. It's basically a cigar butt business, though.
Well, they need to just start making some of those rubber ducks looking like Warren Buffett and Charlie Munger. We've got about a minute left. Question for Steve?
Steve, do you have a personal mission statement?
Wow. I have not thought of that. No, I don't have a personal mission statement, but I can certainly try to come up with, be a good person. How about that?
That's all right.
Okay.
I thought
All right, not acceptable to you?
Do you have one, Joe?
No. I was going to take my cues from you.
You didn't want to go with the Star Wars theme? You didn't have to.
Apparently not.
I'm just saying. Now,
Two-man luge, Princess Leia or Princess Amidala?
now, I got to be honest. Ever since the two-man luge with Steve Broido and Yoda, now I'm just thinking about Star Wars characters representing the United States in the Olympics and what they could do. I think the Ewoks, because they're kind of small, they could be pretty strong in the two-man luge. Not as strong as Steve Broido and Yoda.
But they come from a warm climate.
But people who live in Jamaica live in a warm climate, and they had a bobsled team.
true.
They made a whole movie out of that. You don't think
Fair.
so?
That's fair.
There's a lot of Jawas around, too.
There
saying.
are.
That's kind of a
Jawa's
deep
also
pull.
small. Chewbacca, what are we thinking for him? Javelin?
I don't know. I hope, yeah,
He's
shot
a
put
javelin
maybe.
guy.
Wrestling.
High jump.
You don't get this on other radio shows.
You really don't. You don't get this on Bloomberg Radio, folks. You just don't. Ron Gross, James Early, Joe Mager. Guys, thanks for being here.
Thank you.
Chris.
That is it for this edition of Motley Fool Money. Our engineer is Steve Broido. Our producer is Matt Greer. I'm Chris Hill. Thanks for listening. We will see you next week.